It was a very good quarter. I think that Google Sites growing 21% constant currency, up from 19% last quarter, shows you that last quarter was the aberration, right? That you didn't see this massive deceleration that was lasting. So that's good to see a reacceleration. I think people are very excited that the disclosure actually on the call was a little bit better, at least on CapEx, not OpEx. Still a lot of question marks regarding that, but at least it was a little bit better from the CFO.
Didn't talk much about a regulatory risk until the very end of the call.
No, did not talk a little bit about that, but also, but I think the bigger surprise was also the capital allocation. You know, they have $120 billion in cash, and they're buying back a new $25 billion program. So all of this wrapped up, and the expectation so low, Tyler, and the valuation kind of reasonable. Absolutely, you got everybody
up 11% or so today. Why has this stock been so unloved?
Well, I think after that last call, there was no clarity, and it was basically like, we will not give you any guidance, and we're not going to really tell you where things are going to go. So people were looking for real metrics, and the underperformance that you had seen, and basically the over delivery on kind of what the metrics we were all looking for. And look at cash flow, which is the most important one. We're buying back shares. We're counting the future. We have regulatory risk, but so does everybody. And I think you just have to bake that into your numbers, like Facebook did with $5 billion. These are going to be numbers they're going to be facing. It's a tax, really, on their earnings.
So, the president came out this morning and said, I hope Google doesn't have any problems in China. We'll find out. Market didn't react to that whatsoever. So I think they're looking through regulatory risk as a significant issue when you've got earnings and growth of this type in almost all the names. I mean, Amazon notwithstanding, it's a little blip on the screen probably, but they're not looking at regulatory risk at the moment.
We'll get to Amazon in just a minute. I mean, it looks like search is as always, the engine there, right?
Well,
it is the bull market.
Advertising.
Advertising and cloud.
And cloud.
Cloud is growing, and they're actually disclosing numbers on cloud. And by the way, then you have.
Aren't they aren't they a number 3 in that business?
It's $8 billion versus $36 billion at Amazon, which is why Amazon going at 37% AWS growth isn't really not that big of a deal. It's just law of large numbers. Microsoft is $17 billion.
But being third in an amazing business is
okay.
That's one. Two, I think a lot of the street were thinking more like $6 billion for annualized cloud revenue, and Google's now on an $8 billion run rate, which is ahead of expectations. I'd also point out 40% growth in quote-unquote other. So 84% of this company's revenue comes from advertising and cloud, and now you've got this other unit with some of the bigger bets they've made starting to surprise to the upside.
You own it, you said.
I own it, too.
You own it, too.
I own it, too.
You own it. No.
Do not own it.
And no. Would you add?
Well, everyone owns it because everyone in America owns it because this is one of the biggest holdings. Well, most people are either in an index or in an active fund that's tracking an index, and nobody is going to be drastically underweight Google. So I think it's good for the markets overall to have a company like this where expectations were low come along and say, hey, we ain't going anywhere. We're still Google. We're still Alphabet.